All right, everybody, buckle up. We're diving deep today
Deep, deep.
into the world of market signals, investor psychology, you name it.
Yeah, it's going to be a good one.
We're looking at this report. Inflation concerns persist amid market optimism. Catchy, right?
Gets right to the point.
Hmm. Well, the market seems to be pretty upbeat, but there's this, lingering fear of inflation coming back with a vengeance. Like, what happens in 2025? Everyone's asking that.
Yeah, it's a real head scratcher.
Total head scratcher. So how do we make sense of this?
Well, the report sort of lays it out, right? You've got this market optimism on the one hand,
Right, right.
but then on the other, you have these fund managers who are predicting that inflation is going to roar back in a couple of years. I mean, talk about mixed signals.
It's wild, right? It's like, are we celebrating too soon? Or are these managers just being overly cautious?
Yeah, I think it's important to remember that inflation rates have stabilized recently, so that's definitely good news.
Okay, so that explains the optimism.
Yeah, it gives the markets a reason to, take a breather.
Catch their breath?
Exactly. But the report is basically saying, hold on, don't get too comfortable just yet.
Don't pop the champagne?
Right. Because there are still some serious factors out there that could reignite inflation.
Okay, so let's talk about those.
Hmm.
What are the big, scary inflation triggers that the report highlights?
Well, they talk a lot about geopolitical conflicts. Things like trade wars.
Oh, yeah, those are never good.
Nope.
Yeah,
And then you've got regional instability in various parts of the world.
yeah.
And then there's the possibility, and this is a big one, of new U.S. tariffs.
Oh, tariffs. Classic.
Right. Especially on things like tech and manufacturing.
That would definitely make things more expensive.
Oh, absolutely. And of course, we can't forget about supply chain disruptions. I mean, it
Yeah.
feels like every time we turn around, there's a new disruption.
Yeah, those are brutal. It's always something, right? Whether it's energy or raw materials, something's always getting messed up.
Always. And the thing is, these disruptions, they don't just impact one sector. There's this ripple effect. It's like throwing a stone in a pond.
Total ripple effect.
You get these ever-widening circles.
Okay, so how do these disruptions actually lead to inflation? Break it down for us.
Well, think of it this way. Geopolitical instability leads to disrupted supply chains, which then make things more expensive to produce.
Got it. Supply and demand.
Exactly. And then, on top of that, you slap on some tariffs, which drive up costs even more.
So everything just gets pricier.
Yeah, and ultimately, those higher costs get passed down to us, the consumers. Suddenly, everything from groceries to gas to electronics just costs more.
Ouch. Yeah, that hits the wallet hard. So how's the market reacting to all this uncertainty? Because it sounds like a pretty precarious situation.
Right, it is. And you know what? Investors are starting to get really strategic. They're shifting their focus to sectors that are seen as more, let's say, inflation-proof.
Inflation-proof, I like that.
Yeah, it's a good way to put it. So you're seeing a lot of interest in sectors like technology and healthcare. These are areas where companies can often adjust their prices more easily to keep up with inflation.
Okay, so they're betting on growth and innovation. Makes sense.
Exactly. But it's not just about growth. You're also seeing a bit of a resurgence in what we call defensive stocks.
Defensive stocks. Okay, I think we need to explain that one for our listeners who maybe aren't, seasoned stock market pros.
Absolutely. Defensive stocks are shares in companies that provide goods and services that people need no matter what's happening in the economy. So think about things like utilities, consumer staples, things you buy at the grocery store, and of course, healthcare.
Ah, the essentials. The things we can't live without.
Exactly. People always need electricity, food, and medicine, right? So these companies tend to perform well even during tough economic times.
Got it. So it's kind of like a play it safe strategy.
Yeah, you could say that. It's like hedging your bets. You're betting on the future with tech and healthcare, but you're also keeping some money in those safe, stable sectors.
Smart move. But it's not just about individual investors, right? This has global implications, too.
Oh, without a doubt. The report talks about how currency volatility is on the rise. This can be a really big problem, especially for emerging markets.
Why is that?
Well, as their currencies weaken against the dollar, it makes imports more expensive. It can also make it harder for them to pay off debts that are denominated in dollars.
So it's a whole domino effect.
Exactly. It can really destabilize things.
And speaking of navigating choppy waters, where do central banks fit into all of this? It seems like they have a really tough job right now.
They do. It's a real balancing act. On one hand, they need to keep inflation in check, but on the other hand, they don't want to slam the brakes on the economy.
Right.
Raising interest rates can help fight inflation, but it can also slow down economic growth. So they're walking this tightrope trying to find that sweet spot.
It's like raise rates too much and you risk a recession. But don't raise them enough and inflation could spiral out of control.
Precisely. It's a tough spot to be in, and their decisions have ripple effects across the globe.
It's all connected, isn't it? I mean, this reminds me of when I tried to buy a dishwasher last year.
Yeah.
It was impossible to find one.
Really?
Yeah. It turned out there was this microchip shortage happening on the other side of the world, and it completely messed up the appliance market.
Wow. Yeah, you wouldn't think something like that would have such a widespread impact, but it does.
Exactly. So amidst all this uncertainty and interconnectedness, the report does highlight some opportunities, which is kind of refreshing.
Yeah, there's always opportunity somewhere. It's
Yeah.
all about being adaptable, right?
Totally. So who stands to benefit in this kind of environment?
Well, companies that are proactive and resilient, for sure. The ones that focus on cost management, innovation, and sustainability.
Okay, that makes sense.
Yeah.
Can you give us some specific examples?
Sure, think about companies that are using AI to streamline their operations, or those that are diversifying their supply chains to reduce risk.
Smart moves.
And then there are the companies that are going all in on renewable energy to cut their long-term costs.
So basically, they're turning potential challenges into opportunities.
They are. They're seeing the writing on the wall and adapting to the changing landscape.
That's inspiring. But let's bring it back down to earth for a minute. What about us regular folks? What can we do to navigate all of this?
The report gives some solid advice.
Lay it on us.
First and foremost, diversify, diversify, diversify. Don't put all your eggs in one basket.
Right, spread the risk.
Exactly. And then focus on those inflation-resistant sectors we talked about. Healthcare, technology, essential goods.
Those are the safe havens.
Yeah. And last but not least, stay informed. Keep an eye on policy changes.
Do your homework.
Exactly, because those changes can have a big impact on the market.
Okay, so final takeaway. The market is kind of a mixed bag right now. It's optimistic, but also a little bit on edge.
Yeah, cautious optimism is a good way to put it.
Totally. And understanding what's driving those feelings is key to making smart decisions.
Absolutely. You've got to stay informed. But here's something else to think about, and this is kind of a big question.
I'm intrigued.
What if these inflation fears actually materialize?
Oh, that's a scary thought.
It is, right? How would that impact everyday life?
Yeah, things could get really expensive really fast.
Exactly. And that's something we all need to be prepared for, to think about. How will it affect the cost of housing, education, healthcare, all the big stuff?
Deep stuff. It makes you think.
It does. It's not just about the stock market. It's about our lives.
Well, on that note, I think we've given everyone plenty to chew on for today.
Yeah, we've covered a lot of ground.
Thanks for joining us on this deep dive, everybody.
Always a pleasure.
Keep those brains buzzing. And until next time.
See you then.
Bye.